In today's video, we're going to take a look at 3 Dividend Kings I'm looking to buy. I'm not looking to buy them at current prices, but in today's video, I'm going to show you what prices I am willing to pull the trigger when it comes to buying these 3 Dividend Kings. And for those of you unaware, a Dividend King is a company that has increased its dividend for 50 consecutive years or more. This is higher on the hierarchy when it comes to dividend stocks. Below them is Dividend Aristocrats, which are companies that have increased their dividend for 25 consecutive years or more. But did you know that every Dividend King isn't necessarily a Dividend Aristocrat? Why is that, you might ask? Well, in order to be a Dividend Aristocrat, not only do you have to have 25 consecutive years of dividend increases, but you also need to be a member of the S&P 500, as well as have certain liquidity requirements. So some of those smaller companies that may not be a part of the S&P 500 are still able to be Dividend Kings. So now that we know that, do me a huge favor. Click that like button down below, subscribe to the channel so you're notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. All right, let's jump back into today's video, taking a look at 3 Dividend Kings high on my watch list. Beginning with Dividend King number 1, which is the Coca-Cola Company, stock ticker KO. The Coca-Cola Company is the largest beverage company in the world. This isn't just a US company, this is a global company. The Coca-Cola Company currently has a market cap of $251 billion, and over the past 12 months, shares are down 7%. Coca-Cola is in a much better spot than it was just a few months ago when it was trading closer to $50 per share and was down roughly 20% over that 12-month period. Much of the selling pressures that have come Coca-Cola's way are largely due in part to those GLP-1 weight loss drugs. But as I told you back a few months ago, when the stock was trading in the low 50s and I added to my position, that looked completely overdone, and I still believe that it is overdone. The company has been preparing for this for years. That's why you see them with a lot of zero-calorie options or low sugar to no sugar options as well. Now let's take a look at the dividend, which is about as consistent as they come. As you can see here, the company has 61 consecutive years of dividend growth, a dividend yield of 3.3%, and a 3.5% 5-year dividend growth rate. Safe and reliable. Over the past 12 months, the company has generated free cash flow of $9.7 billion. They've paid dividends over that period of $7.95 billion, giving them a free cash flow payout ratio of 81%. Definitely on the higher side and something to definitely keep an eye on moving forward. Now let's take a look at valuation, where you can see that analysts are looking for the company to generate 2024 EPS of $2.81 per share, giving them a forward price to earnings multiple of 20.7 times. Well below the company's 5-year average of 25.8 times. So valuation from that standpoint looks pretty good. However, over the past few years, the average PE has actually dropped to 21 times, making the stock look a little closer to fairly valued right now. Of the 3 Dividend Kings that we're going to look at today, Coca-Cola is probably the closest to a buy price for me. Which price would I buy it at? Well, I'm looking for Coca-Cola to drop below a 20 times multiple. I will likely buy, which puts the stock price closer to that low $50 range. About 10% below today's price is where I would like to add more. And again, this is the only one of the 3 companies we're looking at today where I already own shares. In the meantime, I will likely wait for earnings at the end of April. And that leads us to Dividend King number 2, which is Target Corporation, stock ticker TGT. Target Corporation is a consumer staple, a large competitor with the likes of Walmart. The company currently has a market cap of $77 billion, and over the past 12 months, the stock is pretty much even, up only 1%. Although Target competes with Walmart, the 2 companies have not really been trading in lockstep, as Walmart is up over 20% over that same 12-month period. Now, if we pull back and look at over the past 6 months only, Target is well outperforming because they were in fact so low. They ran into a lot of inventory issues. They ran into political issues. And Walmart, what's been helping them has also been their grocery component, which they have a larger footprint in. But over that past 6-month period, target shares are up nearly 50%. Now looking at the dividend, you could see 55 consecutive years of dividend growth, a 2.7% dividend yield, and 11.5% 5-year dividend growth rate. Also safe and reliable, but also faster growing than what we saw from Coca-Cola in terms of the dividend, which is unique for a company that has increased its dividend for so long. Over the past 12 months, the company has generated free cash flow of $3.8 billion. They've paid out dividends over that period of $2.01 billion, giving them a free cash flow payout ratio of 53%. Very safe and well covered from the company's free cash flow at the moment, which should allow that dividend to continue growing at a nice clip. Now for valuation, where analysts are looking for the company to generate 2024 EPS of $9.41 per share, giving them a forward PE multiple of 17.6, exactly in line with where the company has traded over the past 5 years. Valuation right now obviously shows the stock is fairly valued, but what I like to see when looking ahead on this fast graphs chart is the increasing EPS growth in the next couple of years, faster growth, making the stock look even more intriguing. In terms of where I'd like to buy the stock, closer to $150 is kind of my buy price there to add shares to my portfolio, which again is about 10% below today's price, putting shares closer to a 15 times multiple, which would build in a natural layer of safety as well. And that leads us to Dividend King number 3, which is Procter & Gamble, stock ticker PG, another consumer staple giant with a portfolio of products that we use every single day, from toothpaste to deodorant to toilet paper, laundry detergent, razors, and so much more. The company currently has a market cap of $365 billion, making it the largest on our list today. And over the past 12 months, the stock is up 3%. Looking at this chart here, you could see that over the past 2.5 years, when we zoom out, shares of P&G have been trading in a range of about $160 down to $130, not really going any higher or any lower. And right now, it's testing the higher end of that range. This is one of those companies that has rallied into earnings. And now, not only has it rallied, but it's trading up against resistance, heading right into that earnings print here coming up real soon. Not a setup that I generally like to jump into right before that. So given that, I want to stick to my strategy and buy a stock, never chase a stock, but buy a stock at a valuation that I'm comfortable buying at. And this is something that we talk about a lot within my 6-week investing accelerator course, where you can work with me one-on-one. We put together a customized strategy and action plan. And more importantly, we teach you how to value individual stocks. If you're interested in that, check out the link down in the description below. Now back to Procter & Gamble, let's take a closer look at its dividend, and it is certainly a king as they have 67 consecutive years of dividend growth, a 2.6% dividend yield, and 5.6% 5-year dividend growth rate, the longest active streak on our list today and really in general. Over the past 12 months, the company has generated free cash flow of $16 billion and paid dividends of $9 billion over that same period, giving them a free cash flow payout ratio of 56%. Such strong free cash flow and growing at that makes this dividend appear plenty safe. Now for valuation, where analysts expect the company to generate EPS of $6.96 over the next 12 months, giving them a forward PE multiple of 22.3 times. That compares favorably to their 5-year average of 24.3 times. Again, another stock that doesn't look all that bad in terms of valuation right now. But given the setup and looking from a technical perspective and fundamental perspective, doesn't look all that intriguing heading into earnings. I'm going to stick to my basis on this and see if we can get a pullback. That's where I'll be looking to buy stocks of Procter & Gamble. All right, so right there, we've gone through 3 Dividend Kings. Again, a Dividend King is a company that has increased its dividend for 50 consecutive years or more. These are 3 of the best right here. Down in the comments section below, let me know which of these 3 Dividend Kings do you currently own in your portfolio. And if you haven't done so yet, make sure you smash that like button down below, subscribe to the channel, and we'll see you in the next one. Take care.